Hey, welcome to the closing beat, everybody. Happy Tuesday. How you doing there? Welcome. We did it right today. Everything looking good. All right, this is just a quick show that we do. It's called Closing Beat. We just give a stock market update for our customers here at Jazz Wealth, as well as those of you that like to watch and follow along. We are financial advisors. We manage our own portfolios, by the way. We don't buy outside mutual funds or anything that costs you money. We have no trading commissions, so we were already one step ahead of Schwab. We'll cover that in a little bit. So we hope you'll check us out at Jazz Wealth, and this is just a show that we can dive in and actually go over some of the good, the bad, and the ugly that happened in the markets for the day. We got some ugly to cover, so we'll dive right in. You got the markets lower by 343. The Dow lower by 343. The S&P lower by 36. NASDAQ lost 90 on the day. Before I do that, let me share this with you. I don't know if this got cut off yesterday. One of our customers sent us $100 trillion from the Bank of Zimbabwe, and that was Jacob. So thanks, Jacob, for sending that in. We're building a wall here of just dough, right? You can take $1 if you want and sign your name on it or write something on there. We're going to slap it on a wall. We're going to start building out a wall to put it on. We actually have a little one started, but we're going to sort of expand on that. So we've got a lot of good currencies coming in. I appreciate that. For those of you that want to participate in that, no big deal. You don't have to do it, of course. No purchase necessary. Anyways, markets lower on the day because of manufacturing numbers. Welcome to October, by the way. We mentioned this yesterday. September is typically the worst performing month out of the year in the S&P. October tends to be the most volatile month in the S&P 500. To give you an example, I'm going to give you some geeky stats today. Hang on tight, because if you want to share this with your friends or make yourself sound like a little smarter, well, here you go. So if you look at the entire S&P 500 and you take each month since 1928, right? And you go, okay, what was the high of the month and what was the high of the month and what was the low of the month, right? And you just look at that starting in 1928. And then you do it all through 1929 and 1930 and so on and so on. And you look at every single month. Believe it or not, the average distance between the high and the low for the month, which is a way to represent volatility, is 6.5%. It's just a little under 6.5%. We all just say 6.5%. So basically in any given month, mostly, to see the markets have a high and a low that are 6.5% apart on average, that's normal, right? Anything outside of that would be abnormal if you think about it. So February and December tend to be a little bit lower. They tend to be 5%. So if you're following along, 6.5% is the average distance from high to low, meaning the markets wiggle around that much in one given month. Not all months, but on average. February and December tend to be around 5%. October is historically at 8.25%. So to give you an idea, right, the markets are moving around average 6.5% back and forth, month after month as an average. February and December, a little bit tighter, not as much activity. And October, 8.25% over the S&P's history there. So we start off the month with some volatility. We've already fallen 1.25% on the Dow. The S&P, of course, 1.25% as well. And what was the reason for that? The markets were doing well. Everything was good overnight. Futures were higher. Dow was up 100 some points. We come into this morning, markets open. Dow was up 100 and some points, got 10 points on the S&P. And right at 10 o'clock Eastern time, the manufacturing numbers came out. And remember last time manufacturing numbers missed. I'm actually going to try to pull up a chart here. We can go, here we go. Yeah, we're going to do it. We're going to do it for better or worse. Here is manufacturing numbers year to date. So last time we covered the manufacturing numbers, yeah, they fell. And we said, okay, that's not good, but manufacturing is not as big of the overall market as it usually, or as it has been in the past, by the way. So what happened today is we fell again. We are now comfortably below 50. 50 is kind of seen as the overall contraction point of the overall stock market there. So manufacturing numbers hit at 10 o'clock, markets start plummeting right away. It's like throw in the towel. The day is just going to be red. Volume real sort of persistent to the downside there. And that's the thing. So now look, when manufacturing numbers fall, you go, okay, what's that mean? Right? Are we going to start throwing around the recession word again? Well, believe it or not, most of the time when the numbers fall below 50 or when they're in this range here, we are either in or close to a recession, actually. So Let's go over some of this, not every time, of course, but I'm going to zoom out. And the gray shaded areas, it's a little messy. Pardon my sort of how far I've zoomed out here. But to give you an example, the gray shaded areas are recessions there that you can see. Yeah, you can see them nicely there. And so we've fallen under this 50 area. Now, when we get into that area, or when we have in the past, we have been near or in a recession, right? Every time we've been in that area is led to a recession. Not every time, I should say, when we get to that area and you look back in the past, that's a replicatable price to look at and say, great, manufacturing was at about this level when we were in or near a recession. Here's the thing, not every time though. If we go back and we look at this area right here, here's 1985, July, November 86, where we fell into that area and we did not go into a recession, right? We can go in over here to 1995, like late 1995, we hit that area. We did not fall into a recession. So it's actually, it's a little tough to say this is the recession-based indicator when there's so many sort of fake little blips in there. However, if there were going to be a recession, it would be when the manufacturing numbers are below 50, right in this sort of range right there. So if that helps you there. Now, if you go back, this goes all the way back to about 1947, right where we blip off the end of the charts there. If you go back, when we drop into this area, 46.6% of the time, if you're wondering, how many times did we go into a recession within a year, or were we currently in a recession, and how many times was it a fake out, right? Dustin, go back and count them all up, figure it out. 46.6% of the time, since as far back as I can actually go, that's when this number started coming out, we were in or within a recession within 1 year, right? So that starts to shrink your window. I did a class for customers about the yield curve, and we broke down the same thing to see about how much time do we have if this yield curve thing is really sort of a metric to guide us into a recession. This is just another thing we can add into the mix there to kind of use not one indicator to decide if we're going to a recession, but start piling things on and kind of see. If you're a real historical buff and you want to look anytime after 1994, that's going to be post-NAFTA, National Free Trade Agreement there, North American Free Trade Agreement. I'm staring at the word national here. If you look at that, past 1994, it's less than 1/4 of the time because manufacturing doesn't mean as much here in the States as it used to. So what does that mean? Well, it means whatever you're willing to take from that. I'm just sharing the stats with you. But it really means the same thing as I said the last time manufacturing came out. Services, that's where it's at. Most of our economy is built on services these days, like it or not. So the services number will be even more important and will likely sort of gyrate the market even more. That comes out on Thursday, I believe. Yep, comes out on Thursday. So we'll cover it. We'll do just like we did last time. We'll look at the services number as well and kind of cover that. One more thing I want to share with you. I told you I'd update you on October 1st. I go back to the charts here. The Fed's recession probability indicator, that ticked higher today, right? So I'm going to just zoom in. Fed's recession probability indicator themselves went from 31.48, which is the last time I reported to you, now up to 37.93. Doesn't sound like a lot. However, if we zoom out to the very first day that they started giving this number, when we get to about the 40% level, we've hit a recession. Anything over where we're at now, and we've been in a recession. Look back every time. When we got 2 and above, we hit a recession. We were already in a recession as this one got above there. This one didn't even get that high. But even if we went higher than that, if you really zoom in on this, we were already headed into a recession as these numbers spiked, right? So that's really not a good one. I don't know why people aren't talking about this one, but the Fed's basically giving you the heads up. Hey, recession coming. And by the way, this number is representative of the year 2020. So if you see down here at the bottom, this is their best assumption that a recession, the odds of a recession happening by the middle of next year. I can't move my mouse away, but I'm going to go over here real quick. This is the date that you're looking at here. So as you go into the last report, that was July. This is now going into August. If it won't tick up on the, there you go. So we're not talking about immediately. We're talking about the likelihood of this happening middle of next year, at least in their best prediction there. So there you go. I mean, if you pay attention to the Fed or you like following that, there's some stuff you very likely are not going to see on TV that actually a lot of fund managers do follow and continue to follow. Can I put those charts away? Can we dive over to the market? Let's do it. So we got the S&P 500 retreating back, still within this range here. It broke below the 50-day. So from a technical perspective, that's going to scare the pants out of the technical traders, at least in the short term. The one saving grace is that the 50-day moving average is flat. Any technical analysis course on the planet is going to tell you that you only respond to trending moving averages unless it's the 200-day moving average. The 200-day moving average, if it's flat, it's best. If it's trending, it's not very good. All the other moving averages that you may use, technical traders want them to be trending. Well, the 50-day moving average is not trending at the moment, so if this does get violated both to the downside and the upside in the short term, nobody is going to think much of it. In the short term, you do have algorithms and stuff that look to place trades as well as to get long or sell positions above and below that number, so you'd expect a little more volatility right in there. We don't need to make this a technical analysis class because you guys will end up leaving comments thinking, you're an active trader, Dustin. No, we're long-term investment, man. You got transportation stocks down a little bit. This is the IYT if you want to follow along. That broke through the 50-day moving average. Look, no matter where you look inside the transportation sector, you hear some rails, Norfolk Southern, Kansas City Southern, all took a little bit of a hit today. Even FedEx, well, FedEx has been weak, so that moved to new lows. UPS took a hit today despite some of the good news there. We'll cover that in a second. So no matter where you look in transportation, they all took a hit on that manufacturing number. Even the truckers, JB Hunt, down about 2% on the day. Industrials as a whole were lower on the day. That you can use the XLI. I just pulled this one up from memory. It's the fastest one I can think of. ETF to cover your industrials there. Down 2% on the day, to be expected with that number that came out. Materials also lower on the day, your basic materials. If you want to dig a little deeper, can we look a little deeper? There you go. You got like 3M in the mix there. For those trending a little bit lower. How about Honeywell? Yeah, there you go. So you can kind of see there some of the materials and stuff. A little bit lower on the day. Naturally, with the bad news, you'd expect a spike in silver and gold and stuff, and you got it. SLV higher, GLD higher. We'll look at the price of gold futures up almost 1% on the day. You also had gold miners, if you like looking at that sort of thing. Oh, that's bonds. Let's look at gold miners. There you go. Gold miners up a little bit on the day. Not really a flight for safety sort of day so far, because today was just a slight down day. I mean, it wasn't like a panic, beat the entire market to death, every sector just getting crushed. Really wasn't like that, although every sector was lower on the day. So that's what you have there. If you look at bonds, yields moved a little bit lower on the day, sort of a wild day of trade for bonds, both long-term and short-term. So they're moving at the moment, trying to move out of that little sloppy coiling up that we've been talking about there for you. What fell the least, even though they're the most overpriced, overvalued, I should say, utilities. So you got utilities, XLU, consumer staples, XLP, if you want to follow that one. That one's down only about 0.25%. And surprisingly, I thought semiconductors held up pretty good too. Only down about 0.5%, a little over 0.5% on the day. I think they could have got hit a little bit harder today. So that stuck out just a little bit for me. Individual stocks that stick out, you got Visa. Holding up today, up 1.33%. That was the best performer in the Dow, one of the only positive names in there. You got Charles Schwab taking a bit of a hit, about 10% down on the day. They're eliminating trading commissions. So if you're at Charles Schwab and you don't like paying whatever they used to charge, $4 or $5, gone. It's not a sales gimmick. It's not anything. They just kind of came out and said, we don't need to charge commissions, so let's get rid of it. We want to compete with Robinhood. Also, to be fair, let's just be honest here. You think these guys are just being like really nice? Do you think they just woke up and said, we don't need the money, right? We'll just let people trade for free. Not really the case there. They manage $3.75 trillion. We do not, right? So imagine charging 1%, 0.5%, whatever it is they charge on average. Some people they charge more, some people they charge less. On $3.75 trillion, they're doing just fine. They'll be okay over there. They get about $1 billion a quarter in revenue from those asset management fees, or just in general as a business. So this is not a large part of their business. I'm going to guess maybe 5 to 8% of their business is commission-based trading. So they're either trying to walk away from it or at least seem like a great place to come. Come do your active trading. We'll market to death to you to move over your retirement accounts and stuff. So it could be. We'll see how that goes. Nonetheless,
hey, wait!
Oh, I did it again. You see what you see how I do this? They let me do this and I mess it up. I did it. That's my bad. Sorry. So nonetheless, you got the other brokerage firms lower. Now, TD Ameritrade down 25% on the day. That's a bad day. TD Ameritrade doesn't do so much in the retirement space, right? Now, they work with financial advisors. They didn't want to work with us when I wanted to work with them, so we don't work with them. But they work with larger financial advisors or people that somehow know how to get them to call. And so they're going to get hit hard because a lot of their money, their overall revenue, comes from trading. You might think of E-Trade. Oops, did I type it right? E-Trade, there you go. So they're also going to get hit there as well. It's E-Trade, right? They just started really reaching out to the asset management side of the business, institutional side. Although they like to think, say they've done it for a while, they just started reaching out to that. So they lost about 16% as well. That's enough focus on that area. Those were some of the bigger losers if you're looking through them today. Philip Morris, a little bit higher here today, added 2.5% on the day. That's awesome. We own that stock. Happy to see at least something higher today. Bank of America said, hey, because of the lack of exposure to vaping, we think they're going to be one of the ones that stands out as more, believe it or not, like reputable, above the noise, sort of not dealing with this sort of dangerous issue there. And so Bank of America was pretty positive on them. No price upgrade, though. McDonald's a little bit lower on the day. Just naturally, everything was a little bit lower. JP Morgan, get this. JP Morgan puts out a thing and they say, we think that their sales growth estimates need to be lower. They were at 6%. We're going to put them at 5%. And so they're going through and they're explaining. We talked with management. We went to their analyst day. And then they had to throw in there at the end. They're like, well, because of weak earnings, right? Nah, they know something. Come on. The way they worded that was like, we've been talking to management. We've figured out the right questions to ask to get the right answers, which maybe we'll go over that someday, how analyst day works at these companies. But then they came out and they said, well, I mean, because of earnings, weak earnings before, that's probably going to hurt them going forward. No, they know. So McDonald's lower today, and I think people figured that out. McDonald's lower than most of the market, so that's that one. Otherwise, did you see Ulta? Ulta was higher today, another 6%. These people are no dummies, the people that run this company. One of the directors, one of the guys on the board of directors there bought 200,000 shares. He now owns 2 million shares. This after the CEO bought shares the other day. She bought whatever it was, 1,600 shares. It was only like $200,000 worth of shares, whereas this guy bought 200,000 shares, so he got more dough. But anyways, they're buying the discount. They know it's a good company long term. They know they got some problems in the long term, but they're working them out. They see it firsthand, and they're like, hey, I want to be a part of this, right? So it makes Kramer look really, really good. Oh, I didn't show the chart. Makes Kramer look good because he basically called the bottom there. You got to give him that. I know a lot of people give him a hard time, but he nailed it there. So looking good. Ulta higher by 6%. All right, 48% of the S&P was above the 50-day moving average. If you listen to me say that every day, we said 65% yesterday. That was accurate yesterday. So we went from 65% to 48%, but now you know why. The S&P was one of them, closed below the 50-day moving average as well. There were 13 new highs on the day. 13 new highs. They all finished in the red, by the way. So Nike, after a nice little run up, ready to take a break, it did hit highs before it started pulling back. We own this one in one of our funds, actually a couple of our funds. So that's fine. This one can take a break here in the short term. All in all, great company, looking good in the long term. That was one of them. Really, yeah, I mean, I saved the screen there. You got like BB&T, Lennar, one of the home builders. Actually, Pulte Homes hit new highs again. Those have been doing well. So those just creeping higher. Texas Instruments hit new highs, but then fell 0.5%. So yeah, 13 new highs, but I don't know that there's a need to put a heavy focus on any of the individual names there. On the downside, the brokerage firms, like we mentioned there, Ameritrade, TD, and E-Trade hitting new lows as well. FedEx, we talked about that hitting new lows. Carnival Cruise hit new lows. Kind of a quick reversal for Carnival Cruise. You don't like to see that. That's a quick aggressive move. And then Biomed, they were the ones that were lower yesterday, just lower again today. I noticed Netflix, and we talked about this yesterday, hit the 1 point whatever it was, and today, just going and giving that final stamp for anybody that hung out for an extra day there. So it took one extra day, in my opinion, but all good there. And AMD, that's the one we're following here. It's supposed to be higher by 2.09% in the next 5 days. It has been 1 day already, as it barely fell today. I gotta say, some of the semiconductors, not all of them, but some of the semiconductors looked okay today, the way they held up. This really had the opportunity, I think, to fall a lot more, and maybe people were looking at the stats or something and saying, oh, no, that one's going to be strong. So I don't know. It was only down 0.75%. I'm not too disappointed in that. UPS was lower. However, I think if it wasn't for today, it would have been higher. Get this. This is really cool. UPS has official approval. They could start tomorrow if they want. They're not gonna, but they could start tomorrow if they want. Flying drones to deliver packages. And not specifically to fly drones. They are the first to be allowed to have their own drone airline. Huh? I mean, technically, the Part 135 that they got means they can be an airline, right? So they can take what they're going to start in healthcare. They can take a package, they could fly it to wherever they plan on dropping these things off in the middle of the night when it's raining, whatever they want to do. They're free to operate as if they were an airline, only they will be unmanned drones. I think that's pretty cool. So that's what that is. And I read that they, including the weight of the drone, they will start by carrying packages that are around 55 pounds or less. I think that's impressive, man. I can't wait to see this. We live in an age where we're going to see drones randomly just flying through the sky, somehow avoiding planes, you know, probably flying a little bit lower or whatever, communicating with air traffic control and dropping off packages wherever they're going to drop them off. I think that's pretty cool. I don't know why. I'm geeking out on that stuff, so that's pretty neat. Also, Stitch Fix reported their earnings. I believe the stock was lower after hours. They didn't do well, right? They beat on earnings, so they've beat on earnings, like we said, every time. This is now 8 times in a row they beat on earnings. Every time since they've been a public company, they have beat on earnings. Revenue was exactly as expected. Average revenue per active user was basically the same, small uptick there. They didn't blow the doors off of it, right? Last quarter they said, we're going to do well. They went crazy saying we're raising guidance and everything's good, we're making all kinds of money. They just didn't show that this time. So I'm not sure where the stock's at now, but I know initially it had to be lower. It's probably lower now. Can I pull it up here after hours here? Someone tell me, is it lower? Stitch Fix, oh, not bad actually, only down 1%? No. It's only down 1% after hours. Okay, so they get a little bit of a break there. They beat on earnings. Maybe that's helping them out, but just didn't blow the doors off of it, in my opinion. So that's all I got there. If you have any questions, I'm happy to take a look, see if I can answer your questions for you. Tomorrow we have 1, 2, 3 Fed members speaking. We've got Las Vegas Sands taking over in the S&P on Thursday, so 2 more days to go on that. We got earnings coming out from Lennar, one of the home builders. That's going to affect the whole sector. Paychex coming out, expecting 69 cents a share. By the way, Paychex charges you to do a rollover. Oh, that's not cool, man. That's not cool. They charge you to roll over your own dough. Never heard of that before. Anyways, Bed Bath & Beyond coming out with earnings. Remember yesterday they were upgraded there. Analysts said they were going to keep their earnings were going to stabilize, so we'll see. They're going to be put to the test tomorrow. Expected to make 31 cents a share. No real dividends to report as of today, so we'll dive in. I see some questions here. Let's see what we got. If it means anything, I saw a woman in a store in New York City buying every single vaping item. Vaping hoarders. Don't take my vape. I believe it. I believe it, man. That's interesting. That's why you save your money when times are good. You see? That lady, I don't vape. I don't really care if you want to go vape or do whatever you do. But that lady was saving her dough for a rainy day. Not because her car broke down or whatever. She was saving because she was going to find a deal on something. I'll bet she got a bulk discount. And that's why you save your dough, right? Is that a way to turn it to a positive? Oh, man. You think the market's headed lower in the short term? All right. I mean, I can understand that argument after today. I mean, it's a weak day. You think it's coming back to the 200-day. We've tested the 200-day multiple times. There'd be no reason to believe we couldn't do it again, especially this late season like we saw last year. Yeah. Tesla delivery report, I think, is tomorrow? Maybe tomorrow? I think it's, I don't know. I'm not sure exactly what day that comes out. I thought it would have been today. I don't know. There's been a lot of emails going around there on will they break 100,000? I don't think they will. I think there was an analyst that came out the other day that said they're going to be under their own estimates. So I don't know. We'll see. 55,000 subscriptions. Did we do it? I never watched that thing. Does it show me anywhere? I don't see where it says anywhere. We have 55,000 subscribers on YouTube. I'll take your word for it. Thanks. Well, thanks to all of you for the support there. I love it. Cool. Did you miss the market recap? You're here. You're living it. Trade talks commence next week. Any thoughts on how to play that market moving event? Oh, it's going to be a market moving event. The really only way you can play it is using options. I'm sorry. There's no way to guess what's going to happen. There's no way to guess what Trump's going to say. I think the people that even work with him can't guess what he's going to say. So the only real way to do it is to play the volatility in options if you can. I don't want to make it an options class or anything, but that's it. That's all you can do. You got implied volatility higher. You got the VIX higher by 13-something% today, 13.36%. Look across the board at any index. Look at all the ETFs. Play volatility if you like. Look at what happened in some of the names that fell hard in transports today. Implied volatility higher there relative to its history. So at least looking back over a year. That's all I can think of, Harry. That's probably all I could offer. Tandra says more catalyst to the upside. You're right. Now we got earnings season sort of working its way back into the mix here. Still a little bit to go. And you've got the trade talks, right? So you have two real good reasons that we could all shake off any concern about the market slowing down. I don't think that's going to happen, but you will see. Proverbial gun to your head recession. You're asking if I had a gun to my head, would I say that there was going to be a recession in the next 18 months? I would say that if you had a gun to my head, I would say that there's a 37.93% chance of there being a recession in the next 18 months, even less. I'd try to get you to not pull the trigger, and I would say in the next year, just so you didn't pull the trigger. Ricardo doesn't believe it. He says, short this thing, man. Good. I know there's been a lot of people that want the markets to pull back either for your short-term trades that you have betting on the downside or just in general to buy a discount. So is anybody really going to be disappointed if the markets fall 5 to 10%? It seems like everybody would love that. We're all asking for the markets to move lower. So whether you're short and active or you're long-term and just wanting to buy a little cheaper, I think it's like the first pullback in a while where we're all on the same page. So I love it. I love it. I love it. I'm with you guys. See some comments to each other there. I love it. Well, hey, that's all we have for you here today. I appreciate you guys following along, playing with me through my mess of going back and forth here on the screens. If I helped you in some way, hit the subscribe button. If you've never heard something today, you watched this for the first time, and you heard a comment or a statistic or something that made you question something or you never even knew existed, I try to give something like that every day so that you guys know there's something new to take away that maybe you didn't know before. I do the same thing for our customers. Every Thursday, I do a class for them and for them only to go through something new, something to remind them, something to update them on either retirement accounts, the stock market, statistics. Market pullbacks is a big one that we cover, and I just like that, right? If I could teach you something every day and teach our customers something every day as well as every week, then won't you just be that much better and more confident in what you're doing, whether it's long-term or short-term? So I really appreciate you guys watching. Also, thanks for watching us on Roku. Got a few emails from people that said they've been watching on Roku on the Investors News channel. Awesome. That's awesome, considering they have done really no marketing at all to let people know that we're live. I know they're watching right now. I don't see anything on their social media, but I'll do my part. Thanks for watching on Roku as well. Enjoy the rest of your day, and we'll see you guys tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.